Good evening, everyone. Welcome back to another video, another day, another dollar, and another choppy session, to say the least. We had some economic news come out, and we had Fed speakers talking, blabbing their mouth. We did some wacky stuff today, taking out both sides of the initial balance, getting our overnight low, attempting to go trend down several times today, and failing several times. Each time we set a new low on the day, guess what? It was a fadeable opportunity to get at least a few points in the book. And that's pretty much all I did today was fade the new lows on each and every push down. That's pretty much what happened for me. I bought. They lined up with levels from some high volume nodes that I've been including into my trading here recently, especially when it comes to looking at something like a 15-minute time frame, and putting that in context with our 30-minute, and then seeing what we're doing in our 1 minute. How are we reacting to those levels? Are we pushing lower? Is volume drying up? Things of that nature. So just kind of looking at the market in a different way, trying to gain my edge. And today that worked out pretty well, as we had this hot volume node from back on the 27th. We came down into it. What did the market do? We reacted, kind of dried up, volume dried up a little bit, and there really wasn't much push below or strength into those areas. So we held, and guess what? We rotated back in. Pretty much just a rotational day for the most part. We go out with just the day is high, the day is low, no wide point of control, none of that. We do go out with a 11 wide point of control in the NASDAQ, 11 wide point of control here at 14,918. So choppy session for them as well. Overall, did well today as far as trading goes. Ended up roughly 50 points, not a lot, not hundreds of points, not thousands of dollars or anything, but enough to keep the confidence rolling, understanding the market, understanding the context in which I'm trading in. Context matters, and we gotta look at it that way. So, and what was the market trying to do? It was trying to push lower and go trend in a market that is in balance still. Market is still in a balance. We officially put ourselves back into a balance by taking out Friday's low. Now, I was calling it imbalance because we pushed up, failed at the highs, and then took out or rotated back into the previous day's range. But we officially put ourselves back into a balance by taking out that Friday low. And then we took out this low back on the 28th as well. So now we are just in a very, very wide range. Your balance high being 43.8025. Your balance low being 42.77. So with the understanding that we are in a balanced market and value has basically gone from, down to overlapping to lower to overlapping to higher to unchanged to basically unchanged coming into this week, value hasn't changed a whole lot. We can continue to see value build within this range, and then see if we continue to get a push lower below 42.77. Will the market push there and get the 200-day moving average, which is hovering around the 42.40 level or the 42.30? We'll look at that in closer detail when we get into our daily time frame and look at that. Give you guys an update in that range. But as far as the day went, that's pretty much it, right? You knew that this market was trying to push in certain ways, but you didn't. Going trend in a market that is balanced is very, very hard to come by. We only go trend some 30% of the time, so the other 60% of the time you're most likely not going to go trend. Doesn't mean you're not going to one time frame down and drift lower. It just means that the odds are likely that you're going to come back in. So fading an edge or fading an extreme is sometimes profitable. Now, you just got to know where you're out at, and that's when looking at like your 15-minute time frames, not the 5-minute, 15-minute time frames can kind of help you out, right? So if each 15 is part of a 30, you can see here when we made that new low in the first 15-minute, we came down, we couldn't take out that first 15-minute low. You look to get long, right? You're like, all right, this market's not going to take that out. You look to get long, and we pop back up, right? Same thing down here. We came near the lows. That seeing that this 15-minute bar couldn't take out this one, so you get long somewhere around 98. Your stop's below 95, and guess what? You pop back up. Same thing here. We get long at the same level, around 98. Your stop's below 95. Couldn't get below that. Boom, pop back up, right? So fading the edge or the extreme on a new low was very profitable, to say the least. And anybody that was selling at the lows obviously got smoked whenever we did pop back up. So let's go over some destinations real quick. Same thing in the NASDAQ. They did attempt to go trend up and then attempted to just pull back near the lows, held the opening a few times, and then just remain rotational and chopped around in their rather large range. So for us in the ES, our upside destinations are 43, 37, 75. Okay, 37.75 today's high of day. Then we have where the single prints start in the upper portion of the lower distribution, 43, 49, 75, 43, 51, 50, where the single prints fill. Then you have the upper distribution that starts at 43, 71, 34. And then you have our balance high here at 43, 80, 25. We get that. We will be one time framing up on our daily time frame, and we'll be looking to rotate higher into that 43.99, and then the afternoon rally high at 44.0775. Then obviously the gap above. Now below us we have 42.9550, then 42.77 low of day. All right, that is our balance low. We get below that, we will continue to drift lower into our 200-day moving average and the gap below that gets filled around the 42.30 level. And we'll look at that in detail here in just a second on our daily chart. Hang out for that. Now, as far as our NASDAQ, we have an 11 wide point of control, 918 right here, 14,918 is the 11 wide point of control. We have today's low of day at 847.75. Then we have the previous day's low or Friday's low at 14,811. Below that is a vacuum down to 658, and then their balance low at 586. Now their balance high is here at 15,060.75, where the gap starts, and that gap fills here at 15,147.50, and then they have that price probe above at 15,223.25. If they take out 15,060.75, they will be one time framing up on their daily, coming out of balance, and you'll look to fill that gap at that 15,147 level. Let's go ahead and look at the larger time frames here. Let's go ahead and look at our daily time frame as we are in a large balance. Now you can see here, there's our balance, right? Balance just chopping around inside of this range. We will look to see if we come out of balance to the upside, back test that 20-day moving average, which will come into play where the gap is located or where it fills. So that 20-day moving average is sitting around the 44.35 level. And then we have our 200-day moving average below our balance low at 42.3250, essentially. And that just happens to be where our, if I pull up where these gaps are, our gap is right there in that 42.40 level. So 200-day moving average is there. 20-day moving average is in that gap above us. Which gap gets filled first and which moving average gets hit next is the question. Does the 20-day moving average get hit, or does the 200-day moving average get hit? Is this a great opportunity for buyers to step into the market and hold? Is this a great opportunity for short sellers that did sell up here, right? Short sellers that did sell to take profit and begin to accumulate a position to go back up, right? Or are we going to have another leg down? Is this just a rest period, and we're going to chop around and finally come out of balance to the downside to get that 200-day moving average and back test it, as we have not touched it in quite some time. The last time we touched it was back here in March. March 24th was the last time we touched the 200-day moving average. So it will have been quite some time since we've seen that 200-day moving average. Will we see that coming up? That is the question. One thing I do want to look at, the weekly time frame. Ooh. Weekly time frame. We broke out that weekly balance, right? Weekly balance low was that 44.2325. We've now been one time framing down 2 weeks in a row. This week so far is inside week. Only way we bring this market into a balance is if we take out last week's high at 43.8150, or we take out the weekly low to continue the one time frame down at 42.77, or we just continue to chop around inside of this range. Me personally, I'm looking to see this market back test last week's low at the very least, see if what is below it. Do we get any acceleration, any volume below it, and finally pushed back into that 200-day moving average. And then ultimately, I'm thinking we test in this range of the 4,200 to 4,180 level, in my opinion. That's where I think this market can go. But take it with a grain of salt. Obviously, this is not financial advice by any means. So take it with what you will. I, however, expect this market to see worse days in the future. So with that being said, ladies and gentlemen, I hope you all have a wonderful day. We'll catch you guys in the next one. See ya.